Sounds good.
What's up, Johnny?
Hey, what's going on, brother? How are you?
I'm good. I hope your Monday's going well.
Oh yeah, Monday, getting busy.
That's right, man. We had you and I had a couple leads come in through realtor.com and connected
Yeah,
those and um yeah, man, it's like a lot of people are like, "Oh, this neck of the woods, it's a second home market and it's going to slow down in the fall and winter time." I haven't seen it. So it's
no, it
I
doesn't
mean,
happen. I mean, that's the thing is some people underestimate the market. It's funny because I actually get busier during this time of year.
exactly.
Maybe it's because we like to hustle and we're willing to get out there and do the work and not take the vacays like some of the bigger, you know, organizations. But yeah, man, it's things are still good. Markets, obviously ever changing. We've kind of been spoiled the last how many years with rates and whatnot, but
Oh
it's
man,
still relatively fair. We had a really good break here last week, right after the elections. I mean, we had probably the biggest jump I've ever seen, or not really jump, actually
right.
break in rates.
Totally. I saw it and it's I think you're absolutely right. There's a lot of apprehensiveness in this market right now from not only you and I as a lender and myself
Yeah,
as an agent, but the general public too. And I think that's why I wanted to have this important conversation because, you know, a lot of people they see the headlines on CNN and they
yeah,
their mind starts talking to them without really understanding what's going on. So, for those of you guys out there watching this, this is my good lender partner, Johnny Higdon. Johnny's with Rivers Edge Mortgage, and he definitely updates me and keeps me educated along the way. And in terms of lending rates and those things, I don't really speak to many people about that because I like you to say it, you know, from your mouth as their guidance and counselor, if you will, when getting approved for a home loan in this market. So um, I think that's a good way that we could start off and I want you to kind of explain what happened last week and how it's going to look moving forward.
yeah. So we get updates. I mean, I get updates on my phone literally throughout the day with market changes, what's going on. We get kind of updates, anytime something happens. So last Thursday we had, you log in the morning and it's like boom, 150 basis point, which in layman terms, that's almost half a point when it comes to rate. So it's like, and it kept improving. So we saw almost, a 0.75 break in rate. So it went from, let's say, 6.875 down to, 6.125, 6.25 in there, depending. But it
Yeah,
was a huge relief. We're starting to see that. And, you know, for people sitting on the sidelines, oh, I'm going to wait till rates drop. Well, we never know if they will.
right.
And obviously, based on what the Mortgage Bankers Association, places like that, they're talking getting back down next year into the lower fives. So we never know. I mean, that's the thing though, is once, when the economy is going to improve, a lot of times real estate, I mean, people don't realize that, but that's a huge market, whether it's new builds, whether it's construction, whether it's building materials, banking,
Right.
mortgage, everything. Like those things are going to influence the market. But for people like us who see this stuff every day and we, kind of nerd out on it. So I'm like, hey, but I tell
Yeah.
people, look, I just bought a new house a month ago and rates were not
Yeah.
great. And I gave
Hey,
up,
man.
gave up a 2.25 fixed rate. And it's like, you know what? But I know that my options in the future are gonna they will rebound. But layman terms that we're still in a good rate environment. So
For sure. I mean, real estate's always an appreciative investment that you can make, and
yeah,
that's the way I look at it. I mean, I would rather have my money in that than, I mean, I have some cryptocurrency and stuff like that, but like those things are volatile, and
yeah,
when you have a home in a hot market or a good area, it's always a win-win. And I think kind of rolling the ball in that direction, let's just theoretically say somebody locks in a rate at, 6.1% right now.
yep,
And, people are hearing these things as like a buy down and those types of things. Let's just kind of forecast the future on how that would look for our general consumer. So let's just theoretically say they lock in their rate with you at 6.1% and they want to
Yep.
kind of open up the can of worms a year later. What does that all mean?
Yeah, I mean, that's the thing is we constantly stay in front of our clients when it comes to that, looking for refinance opportunities. Like we have systems that automatically will look like, if we lock a client, we get somebody, we close, it keeps track of when it's beneficial for them to refinance based on costs, things like that, break even points. But yeah, I mean, that's the thing is like, understanding like this is hopefully short term as far as where these rates have gone, because they got up to like 7.25.
Yeah.
And they're starting to get back down, and most lenders are going to require at least 6 payments, because that's kind of how the investors look at things there. But after that, we can always review to refinance in the future. So when you're talking about different loan types like VA, they have EARLs, which is an interest rate reduction refinance. Very simple, low cost, if any. So we have those with FHA deals. We have what's called FHA Streamline, which they hardly verify anything on that. So it's just, if the market rates improve, we have that. But for some of the conventional, which right now you'll hear people talk about like the 2-1 buy down. So
Yeah.
I have an example here that I kind of pulled up. So what a 2-1 buy down is let's say in a 30-year fixed rate mortgage, people want to compare it to ARM loans, and they're not, because what it does is it's a 30-year fixed rate. So what your final rate's going to be. But what it does is it allows you, so they call it a 2-1. So the first year on that mortgage, let's say, for example, 6.125 rate on a $300,000 loan, 30-year fixed, 5% down conventional, which, when looking at that, what that'll do, and what a 2-1 buy down is the first year, let's say that rate's 6.125, that first year, that payment for the buyer is going to be at 4.125. So, it doesn't seem like a lot, but that's about $368 a month that buyer's going to save on the first year. And then what it does is that next year, the buyer's going to save, so we'll go to 5.125. So then they're still saving $189 a month. And how this works in kind of one of those, kind of a sales, I don't want to say trick, but a sales item for those selling a home. When we were talking March of this year, it's like trying to get anything to sell, like even at listing price without going over was tough, waiving inspections, things like that. So now we're looking at a shifting market where a lot of clients are actually going, or like, sellers are going, man, what can I do? And instead of, hey, let's take 10 grand off the sale price, do a 10 grand, seller credit, because realistically, so on this example for a $300,000 loan, you're looking at about 71.25, so $7,125 that the seller will pay. So what they do is they basically cover the difference in payment in those first 2 years, and then from year 3 on, they're sitting at the 6.125. But to be honest with you, and this is kind of why we get some kickback on this is, hey, what if rates go down? Which we're estimating rates will go down within that 2 years. So with a buy down, a 2-1 buy down, that money actually goes into an escrow account. And let's say we refinance you after 8-10 payments, whatever money's left in that escrow account will go right back to the buyer. So they get that money back. So it's not that it's just getting thrown away or anything like that. If you refinance and then to get a lower rate, things like that, which again, we'll communicate that with you.
For sure.
But it allows them to kind of have a safety net for the first couple of years, because you get people that are, for example, first time home buyers, and they're like, oh, I'm just going to wait for what? To pay another year of your landlord's mortgage at
That's
100%.
exactly it,
Like,
man.
let's get in, build equity, look at what we can do and take advantage of the tax benefits as well as being a homeowner. But it's like getting in and going, let's play the game. Let's not, freak out, especially in, different home prices. Again,
Right.
we're looking at $100,000 loan, or well, it's tough finding a house at that price range nowadays. But you get them smaller ones, it's not a huge different payment, but you get 400, 500, 600,000. This, something like a buy down is a very, very good option.
That's huge.
Yeah, I mean, we'll look at it too, to where it's like, hey, does it, maybe do we look at a permanent buy down, which right now, I wouldn't say to do that, but when we get a break in the rate like we did, on, if somebody's gonna, hey, I'm gonna do a 2-1 buy down. Well, if they're at 6.125 and they were just at 7.25, maybe we pay a point or two and get to the mid fives.
Yeah,
Are we comfortable doing that versus paying, a refinance cost, things like that. So that's the thing, is having a lender that's going to be square with you and go, hey, these are the options. This is what the market's doing. This is
totally.
what I suggest. So
Yeah, and that's why I love working with you because, people out there, they see all these rocket mortgage lending. These are the things that they don't teach you about, man. And
right, I
and
know.
when I can assist my clients and use you as a resource to educate people in this fashion, I mean, that's where the teamwork really pays off in the end for, the clients that we both work with.
Yeah, and and that's the too, is we've got different programs, different grants, different. I mean, there's a ton of different things that we look at. And with brokering, it allows us to have multiple options instead of just going, you go to this bank, they're going to sell what's on the shelf. You know what I mean? The
Yeah,
same thing, you go to this credit, you're going to sell what's on the shelf, which is great. I mean, don't get me wrong, they have great products as well. But it's nice to go, okay, I can do X, Y, and Z. I can do all of these, but I can also look at some of the local bond or grant programs, or we've got this buy down, or hey, we can look at these different investors for different rates or pricing. One might be better this day than the other.
right.
So just having the flexibility really makes a big difference. And when you bring up Rocket, I just, for one of my other agents I work with, I just saved one. They thought they were getting a great deal. I'm like, they were literally paying like almost $17,000 in closing costs on a VA deal. So I went in, got a grant, actually dropped the rate by over 1/4%, and
Jeez.
I'm getting them back because I'm getting them a grant as well. So I'm getting them back like their earnest money at closing. So it makes a big difference. These big box store lenders, like online lenders, it's honestly such a disservice, but you
Yeah,
gotta
I
play
mean,
where
they
the
get
money's at, I suppose. But you also got to be square with the clients. Like, look, man, like I know they've got a really cool name, and I'm a smaller business, but this is why I'm a smaller business, because I'm going to throw my the benefits back to you.
that's
So
exactly it, man. It's you don't get the education perspective when you're inquiring on those high volume type of companies for sure.
yeah,
And I feel like there's not any hand holding. It's all over the
yeah,
phone and hey, where's your underwriting? They don't really have that, I mean, case by case scenario type of um, relationship with that type of lender. And
yeah.
that's why I like messing with you, man.
Yeah, well,
It's a
it's I started that way, man. I started with Wells Fargo in the call center. I was 9 to 5,
yeah.
and we hoped maybe that we closed 50% of the deals that we put in, and I mean,
Hmm.
that's how they're set up. And it's it's a call center type, and the one that I had actually, that I had saved, it was some things that they missed out on. Where I was like, oh, and we had to get creative to make it work. But again, that's another thing that we do, and it's not just another notch in the belt, because as a smaller business,
Right.
if I mess up, guess what? People know, people talk,
That's
and
it.
that's why you got to take care of clients, and kind of go through some of these things, even if I don't 100% agree all the time. Not every situation is the same for like this, like the 2-1 buy down thing. There's a lot of different marketing things out there, but we're going to educate you on all of them and let the client and make the
Ultimately,
best
yeah.
decision for them.
Ultimately decide what's best for them.
Yeah,
Yeah, I mean, you're absolutely right. There's so many times where it's like, oh, I have you know, um, a FHA loan, but little do they know a VA loan at this moment in time might be better for their wants and needs of where they want to
yeah,
go, and the maybe the cash flow isn't as big as it once was, and
yeah,
like you said, these grants offer different opportunities that may not even be brought up with other lenders out there. And I think
yeah.
that's what I'm most appreciative about working with you is, you know, you present those opportunities to my clients.
Yeah, well, we always go to bat, man. That's the kind of my mentality, is just making sure that we're doing the best for our clients, and when it comes to the different options, and right now, for example, let's say we had somebody pre-approved earlier this year when the rates were at 2.5%, 3%, and now they're at
Mhm.
6. It's like, well, now you may not qualify for as much house, or maybe I know some agents don't like to deal with FHA loans when you're in the smaller loan amounts or homes that need some work. Yeah, they can be a pain, but you get some of the bigger ones. It's like somebody may have been qualified for a $300,000 house with conventional, but now they're down to 225 or
Mhm.
250. But
Yeah.
if they go, hey, I'm not going to go conventional, maybe I'll go FHA,
Yeah.
because they allow us to use a higher debt to income ratio. So it's like, hey, I want this house.
Sure.
It's like, hey, maybe we get in here, we work, we wait till rates get lower and try to refinance. So, and that's the thing is not, obviously we never want to try to go, hey, we can go conventional. Let's go FHA. We only do that if we have to, but it's an
Yeah.
option. And for some people that have been shopping for a $300,000 house for the last 6 months, they find one. It's like, oh, wait, your lender didn't communicate with you that rates are changing and now this is your pre-approved amount versus what we were, 3 to
Right.
6 months ago. So,
Yeah.
it's going having those conversations, and it's tough, man. It's just that's why it's good to have a smaller, a lender. There's several really good lenders and companies out there, but the ones that are going to communicate when there's market changes to know, like,
Yeah.
hey, this you were expecting a $2,000 payment. Well, guess what? It's going to be $2,600 or twenty
Yeah.
four hundred dollars now.
Yeah. And you're right. And that's what a lot of these bigger companies don't reveal until it's darn near closing. Now 45 days has passed, and
Yeah,
now it's like, oh, we're at a standstill because of
yeah,
this XY, XY type of factor
yeah,
that comes into the equation that was really not discussed, at
yeah.
that, until that moment in time. Um, about a traditional loan, where, just so we kind of talked about that. What's a traditional loan look like at this moment in time in terms of like percentage down? Um, obviously we talked about the rates, but what could
Yeah.
people expect, if they were to work with you, what they would be prepared to, come
Yeah.
out of
So,
pocket with a
I mean,
traditional loan?
obviously, every situation's different. I mean, I think, everyone, you get people calling, hey, what's your rate today? How much you putting down? How much house you buying? What's your credit
Right.
score? What's your debt to income ratio? How long have you been at your job? There's so many different moving parts, but for instance, like let's say first time home buyer. So depending on where they're living, a lot of areas, especially out in your market, there's a lot of like USDA, which is 100% financing.
Hmm.
Those are great options there. Lower fees. It doesn't have mortgage insurance, but it's got an RD fee, resident or a rural development fee that they charge
Hmm.
on there. But it's actually one of the better. I mean, if I had to go through the best options, if you're a veteran, VA 100%. Next, first time home buyers with little down payment, you're looking at USDA. If credit's not great or where we need it to be, FHA is a great first time home buyer option. I mean, the first house I bought was FHA. With conventional now they've got a lot of different programs. Freddie Mac has one where depending on the client's income, I can get them $2,500 at no additional cost to the client. And if they make a little bit more, depends on each area, but they'll get 1,250 or 1,000. We go through all those programs. Each market has different grant
Sure.
on programs that we can utilize too. Sometimes they make sense, sometimes they don't. But
Yeah.
we'll go through all that with them. As far as conventional, obviously, if we go conventional is just as far as the process going to be the easiest. So I mean, if you've got decent credit, first time home buyers, as long as you have 3% down, home ready and home possible, some of the first time home buyer programs
Yeah.
through
That
those.
that That's great info. And now, just so I have a very big database, and I just want to,
Yeah,
people come from Illinois, Iowa,
yeah,
Wisconsin. Um, Johnny is licensed in multiple states. So,
yeah,
um, if anybody's watching this out there, and you're in, Iowa, for example, or
yeah,
um, not necessarily in Door, Kewaunee County or Brown County, Johnny definitely has options um, for your lending needs if you were to just, not purchase a home up here, but, kind of a more expansive region. So
yeah,
I
yeah.
just wanted to let people know about that too.
Yeah, appreciate it. Yeah, we cover the Midwest and then we get down to Florida too. So we try to, my home office, I've got here in Iowa, then I've got one in Wisconsin as well. So,
Yep.
just really, trying to cover our markets and, just making sure that we know every loan program available in each state that we're licensed in,
Yes.
really makes a big difference. So,
That's awesome, man. Well, I think this was a perfect type of video to educate the people that I'm in
yeah,
connection with. And um, what I'll do is I'll send this out to my database and send some links to them within that email. And if anybody wants to talk to Johnny or myself, we'll always be on standby for you.
yeah. And it may be like that 2-1 buy down, if you got people that maybe have a property listed and it's been sitting for a couple of weeks, 2, 3, which in this market's, that's up there. You get to 30 days, like, okay, what can I do now?
Yeah,
Instead of dropping that price, maybe do a little marketing kick to do one of them 2-1 buy downs. That's
yeah,
why some of these buyers are reluctant because of this rate. Well, let's get them a little help from the seller. It's a very good point. I know in my home market here, it's lights out. A lot of people you're starting to see builders do it. You're starting to see, any of these agents that are listing
sure.
properties that, instead of going, hey, let's bring down the purchase price. No, let's work in, 5-10 grand to help the seller with whether it's closing cost or whether it's a permanent buy down or a 2-1 buy down. Just
Yeah,
another way to market that property to go, okay, now this kind of fits in my wheelhouse.
yeah,
So just something to think about.
yeah. That's that's why you and I work together to get creative and connect the dots. I know we've done a couple of deals together that I wasn't so sure that was going to get to the finish line, and you
Yep,
work some magic, and it's that's what earned my trust working with you into the future, Johnny.
absolutely, man. I appreciate it too. And
Yeah,
likewise, man, just knowing with working with agents that have their clients back and it's not just another transaction. That's where it's at.
that's right, man. Well, cool. We'll do this again soon, and I think the next time we'll cover some different ground and we'll keep the wheels
Yeah,
spinning in that regard, because the more educated people are out there about what they don't see on the news, I think
yeah,
is the important factors that they need to digest.
yeah. You just got to turn the news off, the fear factor.
That's right.
It's
Yeah.
talk to the pros. We'll
Yeah,
get you
that's
there.
right.
So
And create your own news.
that's right.
Yep. Cool, man. Well, I'll catch up with you soon. And yeah, we got to catch up on some other things very soon here too. But I hope this was enjoyed by everybody, and you guys all have a great week out there. Johnny, yeah, I'm not sure if we cut off for a second.
Yeah, yeah, we're good
Okay.
now.
Okay, cool. I'll catch up with you guys soon. Thanks,
Bye
John.
bye. Yeah, see you, man. Take
Okay,
care.
bye. You too.